Hi everyone, my name's PK. Here I have Chris, Alan, and Nunu. They're clients of the Property Investment Accelerator. They've done really, really well. They bought a couple of properties in quick succession in Perth in around the 2022, like mid 2022 time period. Both properties have gone up a lot. They've made almost $350,000 of equity or capital growth. And in this episode, we'll kind of go through their property journey before doing the course, after doing the course. We'll go through their retirement planning strategy. They sort of have quite a, how would you say, an aspirational plan over the next 5 years. And I think that will be really inspiring for everyone to listen and watch. And also we'll go through their mindset and maybe we can get some tips and tricks as well as to how folks can really use data, how they can invest interstate to get these kind of amazing growth profiles. Because remember, all of this happened during 13 consecutive interest rate rises. So they've really bucked the trend and used data, I would say almost with perfection. So, we've already been chatting, guys, and I just want to congratulate you once again. But yeah, it's so good that you've made time, and I'm very grateful.
Cool.
Thank you.
Thanks.
All right, well, let's let's start from the start. Nunu, you're in the superannuation industry. Chris, you're in the car dealership sort of space. I mean, when did you start your property investment journey? Like, and what did that look like?
Oh, so well, I mean, I bought my first house in '93, and then yeah, my first investment property was in 1996. I was in my office, right, and there was the Albert and Logan News came across my desk, and there was this double-story, two-bedroom unit with a garage underneath. And anyway, it was $36,000, and the VT Commodore had just come out, and it was sitting outside my office, and it was $36,000. And I just went, wow, you could buy a house or a car. So literally, ran my ex-wife. We met down there, we did the deal, and went back to work. Literally, like half an hour, it was done, and that was my first investment property, and that actually did very very well. But my PPOR that I had originally bought did really bad. So
Mm,
anyway, so that was kind of it. And then and over time, I've bought and sold a number of properties, and actually got at the time of the GFC, I had 5 properties, and had to tread water for a lot of years to keep those properties and managed to offload some and what have you. And anyway, so then came out of that, and then once we're able to deal with those properties, was able to go right. I've traded out of that bad situation. Let's reevaluate things and go again. So
right.
that was certainly for me, separate to our journey together.
Right. And just on the GFC real quick, because I often don't talk about, I mean, I think I should do more talking about like sort of the risks and negative sides of property investing, given you had to face the GFC and everything that entailed in terms of the property markets. I mean, markets in Australia weren't as impacted as perhaps Europe and the US. But why didn't that sort of put you off property investing? Because I think it probably did put a lot of folks off investing who are holding multiple properties. They dropped, I don't know, some didn't drop, some dropped a lot. And it could be like a scar, and it's like, investing isn't for me. Like, why was your mindset different?
Yeah, my attitude towards that was the reason that that had happened was because I wasn't educated enough about property, and I was on this sort of fairly riding a wave a little bit, and just thought it was bulletproof and nothing could go wrong, and just kept buying properties, buying properties, buying properties, and the banks just lending me money and lending me money, and then all of a sudden, it's like a house of cards. All of a sudden, things go wrong, and then you just gotta, I worked stupid hard to make sure that I didn't have to take massive hits on those properties in a bad time, and I was able to trade out of them. 2 properties I sold straight away, but they were the latest ones that I'd bought. So I just got out of them okay, but it gave me, offloaded some cash flow issues, and so yeah. But I think it's just mindset of the fact that I had made plenty of money out of properties before then, and then lost money. I go, okay, well, I just need to go a couple of steps backwards and do what I did earlier, but understand why that worked at that time and why it didn't work later on. It wasn't just the GFC, because I think that there's been many, many times where properties haven't increased in value that much. And like you said, there's obviously markets in markets and that, but there's a general rule of thumb, they haven't increased so much. So it's a case of knowing the market better, knowing what you're looking for better, and picking a property not for negative gearing, that's for sure, but as a business.
Yeah.
So that was probably where we started getting a bit more into it ourselves,
Right, right.
as a couple.
And then as a couple, you guys sort of, when did you have a plan that, okay, you're going to restart that sort of property investment journey? You have a plan to retire by whatever age. Like how was that process that you that built that plan or sort of, were aligned in that thinking? Because a lot of times it's like the wife is super into it, but sort of dragging the husband along or vice versa. What was the dynamic like with you guys?
Mm,
I
I don't
think
I don't
both
want
of
to do all
us.
the talking, so
Oh,
let you
really?
go.
No. So both of us really wanted to look ahead. So both of us, having worked in financial services, we're fairly educated in terms of forward planning, and we knew that whilst we both enjoy working, we also enjoy our social life and not having KPIs and the expectations to do certain things. So we were then looking ahead as to what we needed to do. So we took stock of where we were at in terms of our super, our investment property, our own and occupied. We still had debt on both, and we went, okay, how are we going to really fast track our retirement? Chris wanted to retire by age 60. He's 55 this year. And we went, okay, how do we need to make that happen? Start talking about it, looked at all our numbers. I'm one of those that if I can I'm a little bit impatient in our relationship. So Chris has more patience. So I then went, instead of 60, is there a chance of bringing that forward? If so, what can we do? So we started looking at those, the numbers, do the number crunching, and then we went, okay, with both our supers, can we actually combine that to make it work more effectively for us? And so that's helped us to pull our super together, set up a self-managed super fund, and with our super combined, we were able to buy a couple of investment properties from there. So with those, and then still have half of our super available.
Oh,
more than half of our super available for other investments. So we wanted to make sure that our self-managed super fund has a diversified investment portfolio, not just property, but other assets as well.
Got it. Got it. And I want to go into that in a second because I know buying through an SMSF is not all like roses. There's challenges and there's various burdensome paperwork and other things to get through. But just before that, Chris, you're obviously like experienced. You've bought many properties in the past. Why did you decide to do the course? I mean, like we was talking about before hitting record, it's not cheap. Yeah, it's $6,000. Like, did you really need to do it, or had you learned enough from your experience to just do it on your own?
Yeah, so I think that again, as I said previously, that trying to understand what I'd done right last time and what I'd done wrong, and to be fair, the stuff that I'd done right was probably more out of luck than strategy, So and the stuff I'd done wrong was probably more out of ego and bad luck, because no one over this side of the world saw the GFC coming, right? But we should have also known that, that I was very stretched, cash flow wise, overstretched. Should have been a bit more patient. So I wanted to not make those mistakes again, and so we started looking at a lot of different ways that we could purchase properties. We considered NDIS. We there's a company called Invicta which do the multi-tenancy things, and we looked at all these different things, and then we came across UPK, and actually Nunu found you and said, hey, check this guy out. So we started watching your YouTubes and became part of the community and what have you. And then we just, everything we found was just good. Whereas when we looked at anything else, almost, there was always negative
There was
talk in the background of it that we just couldn't ignore.
Yeah.
Whereas everything about the course seemed to be tick, 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 you know.
And can I just add, like with the course, because we had the mindset that we want to be quite strategic in what we do to make sure that we can bring forward our retirement. The course had all the data, and so we were able to take the emotion out of it in our decision making in terms of what investment property to purchase and the reasoning why. Because both of us could be fairly fiery in our respective ways, but having gone through the course, we were able to set up our spreadsheet, and then, you know, it provided us a process as to go through that we could clearly articulate as to why this investment property over that property, or why this particular suburb instead of that suburb. And that helped us, you know, made the decisions that we made. And that was, really good.
Yeah. And $6,000, like, sounds like a lot, but when you're thinking about, an average property in Brisbane now is 800, around the Brisbane metro area, and $6,000, it's a very small portion of that price to not make a mistake, or to at least limit the mistake that you might make. So in the scheme of that, $6,000 to us didn't seem that much. Our first property we bought was 541,000. So what was that? 1% pretty much of the purchase price.
Sure.
So, so in the scheme of it, it wasn't that much. We saved more than that just by learning the new negotiation skills and getting people involved, helping us. We found a property manager over in Perth, in Mandurah. Is it Mandurah where we got the first one?
Rockingham.
Warnbro, so in Warnbro. And he did a lot of work for us before we even bought a property, which was great. We would never have thought to do that before. We'd have been like, oh crap, how do we do this? And he was so helpful and honest with us, and he was great. And he was that good that we actually let him lease from us, and then he sublets the property now himself to people in the medical industry, and he sublets the rooms. But he has done little renovations for us, and it's been great. Like, that relationship that we got has been worth way more than the price of the course.
Yeah,
just meeting, it's been great.
Well, thank you. Should we give him? I don't know. You don't have to if you want. Do you want to give that property manager a shout out?
So Tommy Joyce, and was he from Prestige Properties? Prestige Properties in Warnbro. Top guy. Really good.
Yeah. Well, thank you, Tommy. And just diving into that, I mean, both of your properties were in Perth. Perfect timing, really. What was that? I mean, you've just described you leaned very heavily on property managers, but were you guys like super nervous about buying? You're in Brisbane, you're buying in Perth, you're buying. You're not seeing it yourself. You're trusting someone you've barely met, to be honest. To inspect it for you. Of course, the building and pest inspector inspects it as well. But like, were you lacking confidence in that initially? And what was it specifically, or what were the things that happened in the process that really allowed you to sort of, have a broad chest and be like, yep, I'm making the right decision, even though I never even touched this property in my whole life. This is the one I want.
Yeah. So, what do you think?
You answer.
Okay. So I think that we were very nervous. Yeah, definitely. And, what's the never say die, right? Just we just kind of had that attitude. Look, we're gonna do this. We knew Perth was a hot market. We studied the data that you had said to study, and we saw that the market was hot.
Yeah, and we
thought, well, we're
the
gonna have to.
properties that we looked at were interested in like
Just selling like hotcakes.
they were just going. As soon as we looked and went, oh, this one looks, it's fitting all the different criteria. But by the time we went through the 30 odd, it's already been under contract. It was like that, bang, bang, bang. And it was like, oh.
So that gave us a bit of confidence, actually, that the
market was moving.
That area and the market was good market to be in, And we also had the confidence that the numbers stacked up. The numbers stacked up very well on both properties.
Yeah.
And so that was, and we're like, okay, so what's the worst thing that could happen? What's the worst scenario? As long as, like you say, you're building in pest, the house isn't falling down. If we find out some stuff afterwards, we've built in such a buffer into the value of these properties that if suddenly we've got to spend $3,000 on something that we hadn't thought of, it wasn't going to be the end of the world, So we kind of had that mindset in the back of our mind that we're taking a bit of a risk. What's the worst case? We might have to fork out $5,000 or something for stuff that we haven't thought of. But that didn't happen because we did our due diligence quite well, and we got the property managers involved and what have you. So it really didn't, it wasn't that much of a consideration, but it was the final straw to go, yeah, even the worst case, we can still do this, no problem.
Got it. I mean, they've done really well. I think I'm reading your email here. You bought it for 541 in April, or in mid 2022, if I'm not mistaken. April, and it's worth just over 700 now. Your second one in Mindarie, I think it's pronounced. You bought once again for about 680. That's worth about 850. You've bought both of them in Perth. I think, definitely when we started buying in Perth in 2021, I think we must have been the first ones, and everyone was like, oh, Perth's a mining town, it's super high risk. 2022, people started realizing it's like the hottest market almost in the whole of Australia. 2023, even more people start investing. Fast forward to today, 2024, it's like, the biggest hotspot in all of Australia. You've been investing, Chris, for long enough that you know that markets run in cycles. It's not happy days forever. Are you guys concerned about, people still tarnish Perth with the brush that it's all based on mining? If iron ore tanks, or if something happens to China's import of our iron ore, then the whole Perth market will crash just like it did after 2014. I mean, you've got a couple of eggs in that basket. How do you sleep at night, or how do you reconcile that with yourself?
Yeah, for me, it hasn't really been an issue. We looked at the data on that as well, and there's a lot more going on in Perth than just the mining at the minute. It's a very
massive undersupply of properties over there, and with the international migration, population growth, all of that, we just know that at least for the next 10, 20 years, there's still going to be an undersupply issue, and the property market, I think, will continue to be going well.
Yeah.
So, yeah.
And Perth is like, we actually been over and visited Perth. We've got family over there, and we did spend a bit of time over there a couple of weeks, a couple of years ago in 2022. And we loved it. It was great, And there's lots of areas around Perth, Bustleton, Fremantle, all around that area and stuff. And it's a beautiful city, and it's got so much room for growth as well. And we've actually had, since then, we've had friends of ours move over there. And so, yeah, we're quite likened to Perth, actually. We like the idea of spending more time over there in the future, for sure.
Yeah, it's turning a page. I almost think that by the time 2030 rolls around, it'll be like, you guys would have bought in the equivalent of Sydney in 2014, where it was like the bottom of that previous boom, and everyone was like, damn it, I wish I had bought there then. And you guys have done that for Perth. Nunu, I mean, you're in the superannuation industry, like professionally, and you bought, through your SMSF. Could you just run, for everyone's benefit, could you run us through the process of buying in a SMSF? Like, which professionals did you deal with? What were like the challenges that you faced? Because it wasn't all smooth sailing. Just to help people out a little bit.
Sure. So first up, obviously making the decision to set up a self-managed super fund. I certainly think, having worked in financial services for a long time, it's not for everybody. So I'm one of those that you do need to know your responsibilities as trustee of the super fund to make sure it's the right thing for you to do. So having done the due diligence on making sure that we were going to be able to manage the self-managed super fund and our responsibilities right, the next port of call was speaking with our accountants. We spoke with our accountants. We spoke with our mortgage broker. I worked as a mortgage broker previously for a little bit as well, so I understood some of the products that were available but hadn't kept up to pace with the actual bank's policies and such like that. So having a mate who is a mortgage broker helped in that regards to make sure that we were getting the right product, the right loan product for what our needs. Who else did we confer with? So it's pretty much the two, the accountants and our mortgage broker.
And we did a very what would you call it, like low cost setup for the self-managed super fund.
Okay.
So we did a lot of it that basically assist you to do it yourself. And who did we do that through? Grow.
Yeah,
Grow
so Chris
SMSF
is the accountant.
And they've been awesome, brilliant. And they charge an annual fee for doing everything for you, tax returns and everything. And it's so good.
And they're really interactive too. So at the start, when we were setting up the self-managed super fund, we had lots of questions, and Chris was really quick to respond. He was fantastic.
That's the other Chris Keto, who works in SMSF.
Right.
So Grow SMSF. Those guys are brilliant.
Yeah.
So you don't use like a financial planner or anything like that?
No.
Yeah, right.
Yeah, just because we knew enough. Like I said, I've worked in financial services for 20 years. I did a stint as a financial planner myself for a little bit, and then worked as a mortgage broker for a little bit. So have been in that circle. So I understood what we were doing and our responsibilities. Whereas if somebody who hasn't had that knowledge, definitely, I'd say definitely go and seek professional advice, get a financial planner involved in that regards to make sure that you understood your, the key responsibilities, because there's a lot to it. And if it goes pear-shaped, then that's your superannuation fund that could be, taxed at 50%. So that's a lot to lose. So, but because we grew up in the environment and we knew what we needed to do, we then just sought the expertise that we didn't have, and that was the accountant, and then the mortgage broker to actually get the right loan for the properties that we purchase. Yeah.
Got it. And did you find, I mean, you mentioned that properties were selling like hotcakes. They're even selling faster now, but even in 2022, it was a very, very strong market. A lot of people putting in cash offers, blah, blah, blah. You're buying an SMSF, so there's, like you said, there's a fiduciary duty. You can't just rush things. Did that make it harder for you when dealing with sales agents to actually secure the two properties, like win the two properties, or did it not really make much of a difference?
I don't think it made a difference to secure the properties, but we did have one where the contract was written up in the wrong name, and that actually caused a fair chunk of fair hassle for us with the compliance and what have you. So we had to unravel that deal and redo it, and it actually cost us a bit of money to do it, didn't it?
Yes, we had to redo the contracts to make sure that it was in the right name.
Yeah, because you got the Bear Trust, and then you got your actual self-managed super fund trust, and then you got the self-managed super fund company, and then you got the directors. So there's a lot of layers on the contract. So you've got to have that spot on.
And you need to make sure that you spoke with the conveyancer in WA, because they had a different structure to over here in terms of the naming rights and that sort of thing. So we had to get that right. And the process of putting in the contract to, so you had to get the right order as well. So it couldn't, you couldn't do this before that. You had to do this and then that and then that. So had to follow through the bouncing ball to make sure that you got it right.
Yeah, definitely. Yeah, so that was the challenge. And you can't set up the Bear Trust without having a contract, but you can't have a contract without setting up the Bear Trust. Yeah. So they kind of actually against each other. So yeah, so that was really interesting. So the way that, that you get around that is you make the offer, and then before the contract's drawn up, you quickly set up the bare trust, because it doesn't take very long. $500, just go and get it done in a day, and then you can turn the contract into that. So yeah, it was interesting.
Right.
And that's
Challenging, but it was a good learning curve, you know.
Yeah, and that's where having the right people in your corner. So we spoke with for our SMSF to Chris to say, this is what we were doing, what's our process, what do we need to do, and he advised us really clearly and succinctly the process. And he said, you know, the naming has to be in this order. And then we then went to the conveyancer and said, okay, this is what we need to do, and have that in the contract, etc. So it was back and forth.
Got it. And when were you doing all this, like in like lunch breaks, or like how did you manage your time for the course, but also like all of this?
It was just
absolutely all of that, and of course, Perth's
In
3
between.
hours behind
Behind.
us time-wise at the
Yeah.
time. So we're quite lucky where we both have, you know, sort of autonomous jobs. We've got quite long days and what have you, but we do have a little bit of downtime during the day. So, but just the phone calls and everything that we had to do were very efficient.
Yeah.
Like just boom, 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 and so we managed to cross off get through a lot of information in a very short periods of time.
And
With the
sometimes I
professionals
think
we dealt with, which was
I think
great.
that period I was travelling for work as well, so we were conversing by phone, emails, quick Zoom meeting. That's, you know, technology became our best friend. So the contracts were all done electronically.
We had to get our lawyer, because we have to get a lawyer's certificate to say that you've financial advice certificate, so that he's explained your rights as a guarantor of what your obligations are. And so we got him to come to my office, new mate in my office, and we signed the loan contracts in my office at work quickly.
Yeah.
But it took 10 minutes because it was all prepared and everything beforehand. So we just went, right, meet here at this time. We went bang, 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 bang. Okay, see you later. And we all went, and we took the documents down to the courthouse, got them signed, and it was good. It's just,
like, when you think about it, like, yes, there's a bit of work involved, but if you're just efficient and organized, then you can just like, it's like staccato, you just get it done. But then if people have a mindset of just dragging things out, procrastinating, then I think it could become quite burdensome. But it doesn't sound like you guys did that. You kind of knew what you wanted, you knew how to do it, and you just there's no nonsense. You just did it.
The loan documentations, there were a lot of paperwork, so people could get daunted by the amount of paperwork. But if you just literally do follow through the instructions and don't skip, because somebody's tried to skip that in that process and stuffed it up.
So we're not going to point any fingers at anyone, but
so yeah, and we used two different lenders. We used First Mac and
Latrobe. Was the second. Yeah.
So that was interesting as well, because they both had different ways of doing it, you know.
Right. And are you on principal and interest for both of them, or interest only?
Principal and interest.
Principal and interest. Cool. Yeah. Amazing. And then if we kind of zoom out, like, what are your guys' plans for, like, let's say the next 5 to 10 years insofar as property investment? You've obviously got your pre-PY, you've got these two in your SMSF. Are you going to be buying more, or do you have some sort of structure about that?
That is the plan. We got another property at the minute, which is
outside Chris's name,
my name,
that we're looking at offloading.
It's probably a dud investment property, but it's got a ton of equity in it right now. So we're going to offload that, cash that up, and then reevaluate what to do with those funds. And we can still put we can put an extra bit of money into super through Nunu's super that she hasn't, that we can top up. Unused cap that we can top up. So we'll do that.
Right.
And then we'll probably look to purchase some more properties through the self-managed super fund. Right.
But you don't have to say the exact suburb, but where's that property that you're calling a dud? Like, what makes you say that it's a dud?
It's just it's not a dud property. It's a beautiful property. It's waterfront. It's on the water at Calypso Bay, Jacob, as well. Right. So you probably know that area, PK. It's beautiful house, but it's not a good investment property.
Right.
It'd be great as an owner occupier.
Yeah. Great if you want to live there. You know. But we just don't. We love living around here.
Yeah.
I built that house in 2007 and not physically built it myself, but had it built by Gold Coast Civic Homes. It's a great house.
It was a
Beautiful
good
house.
time to build in Brisbane. I think Brisbane had a great run around those years, so you would have got a bit of a leg up. All right, that's amazing. And then maybe last question from me, maybe you guys can take turns at answering this. For folks who are sort of watching, they're a bit like what you guys were. They've engaged in my YouTube community, and they're like, oh, I just don't know how to buy property. I just don't have the confidence to do it. I don't know if property investment is for me or not. I don't want you to like reply by recommending my course, but maybe one by one, what's like your biggest piece of advice that you can give them, so that they can make they can actually get results?
Well, I think for me, it's the leverage part of it. That even if you think about the property, on average, will probably gain between 5 and 8% per year consistently over a 100-year period, right? Your super is probably your second safest bet investment long term, and it probably averaged between 8 and 10%. But with property, you can leverage, so you can turn your 5% into 20%, and it's not taxed as the property grows. Whereas everything else, if you've got a value asset that's growing because they're buying and selling to make that asset grow, every time something gets sold, you got to pay the tax on it. Whereas with property, that money still stays within the property and continues to add value without you having to pay tax on it.
Right.
So for me, it's the leveraging part of property that can really boost your financial windfalls down the track.
Perfect. Leverage and compounding. Brilliant. I love that. And yourself, Nunu?
Pretty much the same thing. I think both of us, having looked at different investment options, property was what we both settled on as a starting point. Just again, like Chris was saying, it's about leveraging. We wanted to fast track our retirement planning, and this was our quickest but safest way of making that happen. Both of us understand about shares, but in terms of the leveraging to buy shares and that, it's a lot harder, riskier from a bank's perspective. They don't lend to the same degree that you can borrow for an investment property. Having said that, like we said, with our self-managed super fund, we're still diversifying our total investment asset base, not just having properties, but we'll have shares and managed funds and such like that as well. So we see both, long-term wise for our retirement, we see both being what's required to make it, in terms of, I suppose, less work and less things to really look at. So with the shares portfolio, we've got an advisor that's managing that for us. The investment properties, we've got property managers managing that, but properties can sometimes have your lumpy expenses, whereas with shares, once you purchase, if it's a long-term hold, then there's nothing, there's no maintenance cost needed for that. So that's why for our purposes, having both will ensure that we've got enough for our retirement and will provide what we need.
Amazing. Well, yeah, I mean, like I was saying before, you guys really come across as being quite unified in your strategy. You're doing it together, which is always the best way to do it. You're on the same page and helping each other. You helped each other through the course. You bought those properties. You've built confidence through everything that you've learned. And I just want to say a massive congratulations.
Thank you.
Thank you. Thanks for all your help as well.
Thank you. Yeah, it's been great.
No,
Awesome.
it's a pleasure. Always, when you emailed me and when other members email me, I always get a big smile on my face. Especially if you're making like 350K equity. That's pretty phenomenal. So yeah, I mean, I don't know if I can take much credit, but I sort of meet you halfway and you meet me the other halfway. You do the work, And yeah, you get the spoils, you get the return. So massive congratulations, guys. And everyone who's watching or listening, hopefully this brought you a lot of value. You can see what it takes to be successful in property investment. You don't need to, be like some sort of data scientist whiz or anything like that. Just a normal person, but with the right attitude, the right mindset. It really takes you a long way. I think people underestimate what they can achieve, over the long term, but small steps, just like what Nunu and Chris have taken, really set you up for a really healthy and joyful and hopefully early retirement as well. There's more than 150 of these client interviews on my client results playlist on YouTube. Honestly, I don't care if you do my course or not, but please go through them, because just like Nunu and Chris, you'll really learn a lot, and you'll be educated and you'll be inspired, and hopefully that will give you a lot of fuel to go off and actually take the next step, which is the most important thing. So thank you for watching. Thank you for listening. Hit the subscribe button, give it a like. And once again, Chris and Nunu, thank you so much for your time.
Thanks,
Thanks,
PK.
PK. See
Cheers.
ya.
Bye.